back again with another weekly review, number 2, road to 6 figures. Man, I hope everybody's doing good. January 20th. I'm here in Jersey, and we call it break. It's cold, but let me get into it. Started off Monday, 7 a.m. Like I always tell you guys, I trade from 7 to now. I switched it to 11. I don't trade from 11 to 12 p.m. anymore because I noticed like the market starts to lose a lot of value during that time. So because it's losing value during that time, I don't even try to force a trade because usually it's a loser. So this trade I was looking at was at 7 a.m. on Nas, and as we can see, we got a nice break of structure. I could call this and a liquidity grab, to be honest. It grabbed all this liquidity up here. I won't say a liquidity grab, but it grabbed all this liquidity up here, and it left us a high probability. Zone, and it's high probability because of this imbalance right here. I just want you guys to notice for future videos. It left a nice imbalance right here. So what it imbalances means that these are orders that were never placed. So when orders weren't replaced, this gives us a good idea of where price is going to come back to. It's going to touch the zone, and we have a higher probability of it going in our favor back in that direction. Aggressive. In this case, it would be aggressive buying. So we're going to take that away. Take this away and let it play out. As you can see, it touched our zone. We got to break a candle. And one thing I started to realize is that when the 200 EMA is cutting through on the 5-minute, even with a nice gap, 200 EMA is when it's cutting through price, you don't really want to trade. Actually, you don't want to trade supply and demand because majority of the time the odds is not in your favor. As you can see on the trade, I got faked out. Boom. Lost. Clean loser on that one. Risk management was, let me see. Risk management was good on this one. Yeah, the risk management was superb on this one. Still lost, and let's see what ended up happening. Yeah, it was completely went in the wrong direction. Although we were coming from a hour demand and a 15-minute demand as well. And it was on the 15-minute, it was still coming into the 200 on the 15. Like I said, on the 5 minutes where we execute our trades, and as you can see, it's it was cutting through the middle when we wanted to take that trade, and that was the main reason why we lost that one. So as you guys know, up until midweek, well, you guys don't know, but now you know, up until midweek, I was trading 2 to 3 trades, but now I solidified my trading plan, a new simplified trading plan, and now I'm only trading 1 to 2 trades a week. I will share my trading plan in a different video, but for this video, I'm just going to keep it simple and keep it to my weekly review. So that was the first trade I took. I want to make this also very smooth. Go to GJ. Yeah, I traded GJ. I know you're probably like, you don't really trade. That's not one of your peers. Yeah, well, I'm also in the chat with my mentor. So when my mentor calls out a trade and it's a part of my plan, I still take those because he takes high probability trades. So that's when I'm able to take a trade off of a pair that I don't usually trade. But I understand, GJ, AU, those are pairs that I traded before, so I understand what lot sizes that I would need to use for those in particular. As you can see, we didn't really have any higher time frame confluence except for the 200 EMA being on the bottom. 15-minute, it had a 15-minute zone. We had a 5 minute, but it wasn't really clean. There was a lot of wicks. It was low probability. So we decided to take this off the 15 minute. As you can see, 15-minute high probability demand. We got to break a candle. We held the trade and it almost went against us, but this is when you have to be patient. I'm not gonna lie, I was a little like skeptical, but this is why risk management is so important, because if you're over leveraging, price will come down right next to your stop loss and you'll get out. And there's nothing wrong with, like, you're seeing it come close and then you're like, all right, let me just cut my loss. But in a sense like this, where it's like, you know what I'm saying, like it's barely moved, we clearly got a bullish to the upside. So we know when it comes to GJ, at least, it likes to wick a lot. So trust your stop loss, trust your trade. You know how much you was risking, and it paid off in this trade because ended up becoming a winner right here. It literally smacked and we were done. That was fast, right? Smacked and it was done. That's why we go for 1-to-1s. So that was the case with that one. So overall, that day was a winning day. I covered my losses on my first trade, made a little extra. And remember, I told you I had another trade on US NAS 100, but it was a break-even trade that didn't really do much. So my bias in taking this was that, boom, high probability supply, tapped the zone, came close to my TP, but I noticed that, like, okay, price wants to go back up. Although I seen the 200 EMA up top, I seen that, like, at the moment, hold on, let me fix this. I noticed that the 200 was cutting through the 15-minute, and that's another key, another gem. When the 200 is cutting through the 15-minute, you want to be careful with 5 minutes supply and demand. It's the same with it crossing the 5-minute. If it's crossing the 5 or the 15, 200, if the 200 EMA is crossing the 5 or 15, you don't want to trade supply and demand. You want to focus more on liquidity grabs. And I noticed it late when I checked it, and that's what made me want to, like, get out at break even before it came, and you know what I'm saying, and got me out. Got out with a little something, nothing too crazy. And that was that trade, my trades for Monday. Going into Tuesday, actually, we stay on this pair. As we can see on the hour, we had the 200 coming off. We touched the 1 hour demand zone. And I know you're probably like, how did you lose on this if it's touching the 1 hour demand zone? I'm about to break it down. 200 was over the top. Remember, 15 and 5 minute are what we pay more attention to, because we're trading like live market. Like, we're trading in that moment, not the long-term move, but the short-term moves. So we have to really pay attention. And as you can see, once again, high probability demand. We were getting multiple breaker structures to the top. This is our textbook entry. But what was the case? Boom. 200 cutting straight through price. And as I can see, when that happens, and this is a key thing I noticed, when that happens, what happens? Reversal. Came back and it came against me and it knocked me out the trade. And what ended up happening? We had a liquidity grab, right? Right here. This could have been a winner. Once it broke right here, boom, look what ended up happening. This would have been an amazing winner. And why? Because when the 200 is cutting through price, we only want to look for liquidity grabs. When the 200 EMA is cutting through price, we only want to look for liquidity grabs. And this right here wasn't a bad move. It was high probability, but the reason why our odds got lowered, although it was high probability, was the fact that, once again, the 200 was cutting through price. So boom, it smacked our stop loss and we lost that trade. If I was paying more attention, now looking back, I see that if I would have noticed 200 was cutting through price, I wouldn't have taken this zone. I would have saved money first. Secondly, I would have seen that, okay, these two candles never closed below this wick right here. It never closed, like the body of the candle, like the volume never closed below. So once I seen it wick, took liquidity from this one and come back up, and then it broke right here, I would have entered, put my stop loss down here, and this would have been the winner. So I'm just letting you guys know how we can move into week 3 with a better mindset, with accuracy, with going for trades with odds in our favor. That's what we're here for. So that was the loser. And what else did I take? On Tuesday, I took another GU setup. Got the club going up. Tuesday. As you can see, we had the 200 EMA right above on the hour. Wasn't much higher time frame confluence other than that. For the 1 hour, 200 EMA coming over top on the 15. 5 minute was really what we were paying attention to. Once again, this one was a low probability. What I should have noticed was that all of London price was going down, and what I should have noticed is how it started to come up and started to break those highs. And New York likes to do reversals, so we have to keep that in mind for next time. And that's exactly what happened. As we can see, low probability setup. That was number 1. I don't take low probabilities. This would have been a better setup to take, but obviously I missed that one. So I thought to take this one, and this one was actually, like I said, low probability. Still took it on the break of candle. Came close to my TP. Ended up holding because, you know what I'm saying, my risk management was cool. And it came back, reversed on me, and got knocked out the trade. What I learned about this was stick to high probability trades. Unless only low probability, supply and demand, if we have higher time frame confluence. Higher time frame confluence meaning either the 15 or hour is also like a supply demand area. Then we have multiple time frames going in that direction. That's when it's like, okay, yeah, we know like this has a greater chance to win now, as opposed to just it straight being a low probability, just only 5 minute time frame move. So boom, that was Tuesday. Tuesday was, you know what I'm saying, it was like what it was. Then we're getting into Wednesday. Euro USD. This was the trade. Once again, liquidity grabs was the stuff this week. Noticing that I'm getting a lot more comfortable with my liquidity grabs. As we can see, got a breaker structure to the bottom here. He was also getting a 15 minute grab liquidity, 200 EMA up top. Boom. Yeah, my bias was real simple. Look, it touched the 200 EMA. That was like, once I seen that, I hesitated just a little bit, which is why I got a little later entry. But I took it nonetheless. And we had like breaker structure to the bottom. So this was like very, very legit. Boom, took that. Caught a nice smooth 9 pips. And yeah, that was Wednesday's move. That was Wednesday's moves for real. So Thursday I only took 1 trade for real. And it was AUD USD. I didn't do too much on this one. This one was another one that was called by my mentor. Boom, one of my mentors called this. And what I realized was that 200 EMA was on the 15 was, like we always talk about, going through price. 1 hour was bearish, 200 EMA up top, but 15 minute went through price. 5 minute was below, but you know what I'm saying? That's what we was paying attention to. We had a high probability demand zone, as we can see. It's breaking structure to the top. it was a lot of consolidation around this time. So it's not even like price was just straight pushing from London in one direction. And we ended up taking it on the break of candle right here. I ended up taking it on this break of candle right here in this area, and it just literally just broke down to the downside, and it was a loser. And I think I seen other moves, but like after this loss, I didn't fiend, or I didn't feel rushed to get into any trades. Like I told you, after this moment, I realized I'm sticking to 1 to 2 trades a day, because that's gonna breed consistency, quality over quantity. Remember that. Ding. Now we're gonna go to Friday Euro USD. As we can see off the hour, the trend is showing us bearish with the 200 EMA on top, although it looks like, as we see, like New York started to reverse. But we're gonna cut right here to 7 a.m. 15 minute showed us just bullish momentum, as we can say, with the 200 EMA on the bottom. 5 minute showed us the 200 EMA right here at price with a high probability demand, right? So now let's watch and see what happens. So with this one, you just got to chalk it up, because sometimes you're going to win some trades and sometimes you're just going to lose some trades. And that's the probability of trading. Like, that's why you have to have great risk management. You got to know anything can happen in the market, because everything could go your way and it could be a loser. Just like this one, like, it just happens sometimes. Remember, these aren't 100% win strategies. These are 70, 80, 60% win strategies. The key is not to try to like get 100%. The key is to have risk management and to win more than we lose, and to win bigger and have smaller losses. If we have that, we're always going to be profitable and consistent, which is why we focus on risk management and our trading plan. Those are two big keys, and everything else comes after. So boom, this was a loss for me. As you can see, it ended up winning. So what I realized sometimes is that you can even cover like the whole zone, because my stop loss was so small. What I could have done is just moved it below the zone, below the 200 EMA, honestly. However, like I said, it was high probability, so I just put it underneath the break of candle. But if I did use the whole zone, seeing how small the zone was, because 4 pips is nothing. My stop loss was like 2 pips. It wasn't a big loss. That would have been still 1-1. That would have been 5 pips taken. So now I learned, like, listen, if my zone is very small, like if where I'm taking a break of candle is very small, I can give it a little breathing room, like 4 or 5 pips. If the zone is right there too, put it underneath the zone. So you can see here, it touched the 200 EMA and it just bounced off it, and it went into profit and it smacked. Boom, easily. But we never know what price is going to do, honestly. So my last trade was with Nas, and this one was superb. Whoa, it just ended up just skyrocketing, right? So as we can see, the 200 EMA on the 1 hour is very bullish. Mind you, Nas reached all-time high this, like, on Friday, all-time highs. So we knew, like, okay, like the market needs to drop. Like, people are gonna sell a little bit. So knowing that, around 8:35, we've seen a perfect liquidity grab up here on the 5 minute, right here on a 5 minute, as you can see. Mind you, 200 EMA on the bottom, but we're under far understanding, knowing like, okay, we're reaching all-time highs. Let me show you guys so you guys can see. This is what we're seeing in real time. All-time highs, you feel me? All-time highs. So we knew it had to drop a little bit. So because we knew it had to drop a little bit, we decided to grab this liquidity, and it's grabbing liquidity right here. This body candle didn't pass right here, this wick, and because it didn't, we got to break a candle, got in, and I took a couple pips. And what was crazy is that it just kept going down. It kept going down. It kept, obviously before it reversed, but it kept going down. But in real time, this was an amazing trade. We got profit for the day, and we finished on a win. And we learned so much this week. Um, Honestly, I went 5 for 5. I really perfected my trading plan now, and this is the trading plan I'm sticking to. Make it simple. You know what I'm saying? When you're watching live market, you want to make it very easy for yourself to know what you're looking for, not making it overcomplicated, not looking for too much, not making you pause too much to see if like, dang, am I like, should I enter now or not? Like conflicting. You want to. These are my reasons for entering the trade. These are my reasons for not entering the trade. Make it objective. Make it simple. Make it easy for you to understand, and we can reach those 6 figs. Listen, break even week, but a lot of information learned. I already know like the market's just only going to get better from here. It's going to pick up now that the weeks are going by into the new year. Like this is how it usually is. It's going to start picking up and it's going to get amazing, man. And we're going to have a lot of volume, and that's when supply and demand becomes the best. So until next week, I wish you guys good luck, and let's get it, man.